Hey, welcome back. In today's video, I'll talk about Redfin's latest housing market update just posted yesterday. They reported that average mortgage payments just increased to the highest levels on record. So it says here, daily average rates jumped to the highest level since last November after last week's disappointing inflation data. So the CPI report, or the Consumer Price Index, came in much hotter than what was expected, and we saw a giant increase in rates last Wednesday. Persistently high home prices are exacerbating affordability challenges for buyers. And again, average would-be housing payments or mortgage payments just increased to an all-time record high. Let's first talk about some leading indications of home buying activity in our US housing market, because I didn't make a video about this yet. So here's a look at daily rates according to the Mortgage News Daily. It's not 7.4. I'm making this video on the 19th of April. So the average daily rate for a 30-year fix for people with great credit is at 7.44%. FHA and VA loans is around 6.92 to 6.94%. Looking at 1 year ago, we're at 6.75%. So rates have increased by 69 basis points compared to 1 year ago. What I found to be interesting, though, is that on February 1st, the average 30-year fixed rate was at 6.63%. Now it's at nearly 1 percentage point higher at 7.44%. So in the span of just 2.5 months, daily rates have increased by about 80 basis points, which is pretty phenomenal. Having said that, we're still down compared to the peak. That was a 20-year high regarding rates back in mid-October. We were at around 8%. Also looking at average weekly rates, according to Freddie Mac, the average 30-year fixed rate is at 7.10%. According to Freddie Mac's chief economist, he stated the following: as rates trend higher, potential home buyers are deciding whether to buy before rates rise even more or hold off on the hopes of decreases later this year. So I think we could see more and more people getting priced out or deciding to put their plans on hold to buy a house because rates have increased so much over the past 2.5 months. So therefore, we could see a decrease of contracts being signed or pending home sales in the next coming weeks as well. Time will tell, and I'll definitely keep you posted. Also, another leading indication of home buying activity is the amount of applications to buy houses, or I should say the amount of applications for home loans to buy houses. Here's another look at a leading indication of home buying activity. This is based on a weekly report from the MBA. This covers the week ended April 12th this year. So their seasonally adjusted purchase index increased by 5% from 1 week ago, but it's down by 10% on a year-over-year basis. This is an index which measures the amount of people submitting mortgage applications to buy houses. So we're up from last week, but still down year over year. According to the MBA's chief economist, he stated the following: rates increased for the second consecutive week, driven by incoming data indicating that the economy remains strong and inflation is proving to be tougher to bring down. Despite these higher rates, applications picked up, possibly as some borrowers decide to act in case rates continue to increase. My advice for you guys: don't try to time the market, because rates fluctuate on a daily basis. Of course, they fluctuate on a weekly basis as well. There's no really data showing that we're going to see a big increase in rates anytime soon. But in contrast, there's no data as well that shows that rates will decrease as well. So my advice for you guys: buy when it's right for you. Meanwhile, the share of refinance activity increased to 32.1% of total applications. Isn't that wild that 3 of every 10 applications for a home loan are for people who are doing a refi? Now, I'd imagine that figure about 3 months ago was around 90% of refis were doing a cash out refi. So I would imagine that the vast majority of these people doing a refi are getting cash out of their houses in order to pay for everyday living expenses. All right, going back to Redfin's report here, let's talk about Redfin's Homebuyer Demand Index. This is an index which measures the amount of requests for home tours and other home buying services. That's down 11% on a year-over-year basis, which is right here. Last year's levels is right here. In red is 2022, and right here is 2021. So on top of that, they're down on a year-over-year basis, but also at least a 3-year low as well for this time frame. To me, this makes sense because rates are much higher compared to a year ago. And of course, they're much higher compared to 2021 and 2022 as well. I believe this time in 2021, the average rate was around 3%. Now we're at 7.4%. Also, according to Redfin, touring activity actually increased by 33% compared to the first week this year. At this time last year, it was up by only 23%. Also, Google searches for homes for sale were down by 17% on a year-over-year basis and unchanged compared to 1 month ago. Okay, let's talk about home prices, housing inventory, pending home sales, new listings, and much, much more. Let's first talk about the median sold price. This is on a national level, and Redfin looks at 400 plus US metros, and their weekly data goes back to 2015. So check this out. The median sold price on a national level is at $380,250. This means we're only about $3,000 shy of the all-time record high that was set back in June of 2022. In my personal opinion, the reason why we're not too far off the all-time record highs is due to a lack of houses for sale. Even though it's up by about 10% on a year-over-year basis, we still have a long ways to go. And of course, home buying demand is exceeding the amount of houses for sale, at least for right now. And that's why we're seeing home prices overall increase. On top of that, the median asking price increased to just over $413,000, and that is an all-time record high. However, the share of price reductions is also at least a 3-year high for this time frame. And I'll share that with you guys here in a little bit. Also, the median monthly mortgage payment, again, all-time record high at $2,775 per month. However, though, that's based on the weekly rate 1 week ago at 6.88% for an average 30-year fix. But again, according to Freddie Mac, as of April 18th, that increased to 7.10%. So this number at 2,775 will likely look a lot higher next week once Redfin announced their new report next Thursday. In regards to the median sale price, let's have a look at the 50 most populous metros. So there's only one metro still that is down on a year-over-year basis, and that is San Antonio, Texas. Down by 1% year-over-year. Meanwhile, Anaheim, California is up by a whopping 24.8%. That is in the number one spot by a long shot here. After that, we have Providence, Rhode Island, Nassau County, New York, West Palm Beach, Florida, and New Brunswick, New Jersey. All right, let's change gears slightly here and talk about pending home sales, a measure of contracts being signed between buyers and sellers, new listings, a measure of homeowners who are listing their houses for sale, and then active listings or housing supply or housing inventory, the amount of houses for sale. So pending home sales decreased by 2.3% from 12 months ago, but new listings increased by 10.8%. This has been a common trend we're seeing where pending sales on a year-over-year basis are going down, whereas new listings are going up. So at least on a year-over-year basis, we're seeing supply outpace demand. Also, active listings rose by 9.6% on a year-over-year basis, and the month supply is at 3.3 months. Every housing market's different though, right? Because the amount of pending home sales actually increased in 14 of the 50 biggest metros. This means, of course, that 36 of the 50 are down on a year-over-year basis. The biggest increase, San Jose, California, once again, up by a whopping 25.6%. The San Francisco Bay Area, rounding out the top three here because San Francisco up by 11%, Oakland, California up by 7.1%. After that, we have Columbus, Ohio, and Seattle. In contrast, the biggest decrease of contracts being signed between buyers and sellers of existing houses was in Nassau County, down by 15%. Then we have Atlanta, Houston, Riverside, and Fort Lauderdale. Quite a bit different scenario when looking at the number of new listings because those decrease in 9 of the 50 biggest metros. So 41 of the 50 metros are up on a year-over-year basis. San Jose, California, leading the nation by far, up by about 47%. Then we have Sacramento, California, where I live and work as a real estate agent here, up by about 28%. Phoenix, and then Jacksonville, Florida, and Dallas. In contrast, the biggest decreases of new listings is Newark, New Jersey. Then we have Providence of Rhode Island, Milwaukee, Chicago, and Detroit. All right, let's take a look at some charts. Let's first talk about home prices here. So as you can see, this is 2023. We're getting very close to the all-time record highs that was set back in June of 2022. When at that time, the median sold price was around $383,000. Home prices are also up greatly compared to the same time frame in 2021, because back then, the median sold price was around $320,000. Now it's at $480,000, or $380,000, I should say. And that's an increase of $60,000 over the past 3 years. Meanwhile, as I mentioned, the median asking price is at an all-time record high by far. The previous all-time record high back in 2022, for example, was around $400,000. Now it's at $413,000. Also, again, average monthly housing payments, all-time record highs, which is pretty crazy, right? Because the previous all-time record high, besides the past couple of weeks here, was back in October of 2023. And the average 30-year fixed rate was at 8%. Now, according to Freddie Mac, as of last week, it's at 6.88%. So the increase of your average monthly housing payment is due to elevated rates, but more importantly, due to a huge increase in home prices over the past couple of years. Also, when looking at pending home sales, that's down by 2.3% year over year, and that is at least a 3-year low during this time frame. And just look how this year compares to 2022 and 21, because pending home sales were rising big time starting in February through the early summer months, whereas this year they were increasing, but more recently here, pending sales basically going flat. And again, the reason for that is likely due to elevated rates and of course, home prices as well. Let's have a look at the measure of new listings though, because that increased by about 11% on a year-over-year basis. It's higher compared to last year, but much lower compared to 21 and 2022. And by the way, if you guys want to see home prices decrease big time, we want to see this line basically going straight up. We want to see a market in which supply is far outpacing demand, but so far we're not seeing that because here's a look at active listings. It is increasing, but over the past 1 month or so, new listings, or active listings, I should say, have been relatively flat. Having said that, they're still up by 9.6% from 12 months ago. And on top of that, it's at least a 3-year high during this time frame as well. Let's take a look at the month supply. That's at 3.3 months. And this is something that caught my attention here because the month supply was decreasing ever since February. But this last week, it actually increased, much different compared to the past several years. So for example, this time last year, the month supply was decreasing through mid-July. In regards to days in the market, the median days in the market is at 35 days. That's a time frame when you list your house for sale until you accept an offer from a home buyer. That's at 35 days, slightly faster from this time last year. At this time last year, days in the market was at 36 days, but houses are still taking longer to sell compared to 2021 and 2022. Back in this time in 2022, days in the market was approximately 22 to about 23 days. Now it's at 35 days. Remember when I said we have all-time record highs for average asking prices, but on top of that, we also have at least a 3-year high regarding the share of price reductions as well. According to Redfin, the share of price drops right now is at 5.9% and basically going straight up over the past 1 month. Much different compared to 2023, where the share of price drops was relatively flat from March through June last year. Something I found to be interesting though is that even though we have very close to all-time record highs for home prices overall, the share price drops has been increasing big time this year. We started at around 3.5%. Now it's at 5.9%. So nearly doubling over the past 4.5 months. This is actually at a faster pace compared to 2022, which of course back then we had home prices decrease in the second half of 2022. To start the year, in that year, we were at around 1.75% in January of 2022, then increased to just under 2.5% by mid-April. So I'm really curious to see what the rest of the year will look like, because will the share price drops go like this, or will they level off and get to more or less on par with 2022's levels? In my personal opinion, it depends on the direction of new listings, housing inventory, and also mortgage rates as well. Because if rates start increasing once again and they rise to 8%, for example, of course that's going to take the wind out of the sails of our spring home buying season. And because of that, and if we see more houses being listed for sale and more active listings, we'll see more price drops, as well as more home sellers have to compete against each other in order to get an offer accepted. And lastly, let's have a look at the average sale price to final list price ratio. That's at 99.2%. So out of all the houses that sold over the past 1 month, they sold for 0.8 percentage points less than the seller's final list price. This is slightly higher compared to 2023, when at that time, the average sale price to final list price ratio was around 99%, but this is still much lower compared to 2022, for example. So back then, the ratio was just over 102%, which means that houses were selling for about 2% over the seller's final list price. Now they're selling for around 1% below. But what's your biggest takeaway from today's video? Please like and subscribe. Hope you guys have an awesome day. We'll see you in the next video.